Traders at Axis Bank say they expect the Treasury bills market to end the week on a quiet note as rates decline despite the UMO auction floated by the Central Bank of Nigeria. Akpevwe Oputu, money market trader at Axis Bank, joins me to discuss this week's activities at the fixed income and FX markets. Akpevwe, thank you for joining us today. Let's start with market performance so far today before we do a weekly review. What can you tell us in terms of how market activities are progressing so far?
Okay, thank you for having us on the show. So on the Treasury bill space, we've seen a lot of demand filter into the market. Because of the OMO auction that was conducted yesterday, we had subscription of over 250 billion, but the central bank only sold about 100 billion into the market. So we've seen the excess demand filter into the secondary market. We've seen a lot of banks trading on that, and we've seen yields around the long end of the curve trade around 4.5 to 5% levels on the long end of the curve, given that the NTB auction, the rate was actually reduced to close at 4.35 on the longer end, coming from 5.2 levels where it closed at the previous auction. So we're actually seeing a lot of demand in the secondary market on the fixed income space.
And do you foresee these demands being sustained and pushing rates even lower?
Yes, we'll see that trend into the market. There's a lot of liquidity in the system in the hands of some banks, so we'll see them taking yields at 4.5 levels in the market just to avoid the usual CR debit that the central bank always allow to happen every Friday. So that's actually what is driving those yields lower in the secondary market.
Well, let's talk about this week's activities as a whole across the different market segments. Of course, you've established that liquidity levels appear to be at a high at the moment. But right from Monday up until now, how would you describe investor sentiment? What is the investing strategy? And obviously, they're not too happy about lower yields, but I suppose, I mean, there are few options in terms of where to put all that cash.
Okay, so there are very few alternatives for banks to invest in. So you could actually think of buying the bonds, and bonds, the yields in the bond market, we saw from the last auction that was conducted last week, we saw the yields trend downwards. Even on the short end of the curve, the 2026s, the 27, the on-the-run bonds, we've seen them trade around 10% levels, so about 10.17 on the 2026 bond, and that's actually a very low rate for investors given the risk appetite in the market. So very few opportunities out there, and given that banks would rather put their funds somewhere rather than being debited for the usual CRR. So we've seen this affect the rates that we see in the market. So but the Treasury bills are actually trading lower than the expectation at the NTB auction. So.
What about, bring us up to speed on trading at the FX market since Monday?
Okay, so the CBN intervened in the market Mondays and Wednesdays. We've seen them come in to provide funds for the FPI as their usual practice is, and that hasn't changed. And the INE window, we've seen the FX rate trade around 4.16 to the naira to the dollar, so that hasn't changed much, and that's what we see going into next week. Rates at the NAFEX window trended lower yesterday to trade around 415 naira to the dollar. So from the euro bond, the euro to dollar, we've seen that actually trend down, coming from 1.3 to 1.1, and that's due to what we see happening on the news and the Ukraine and the Russia activities right now.
But do you expect this week's trend to flow into next week, or do you foresee any change? And if that's the case, what could be a catalyst to switch things up a bit?
Okay, so we expect that the FAC inflow would come into the week next week. So they've actually held the beating. Once this liquidity comes into the market, we'll see a lot of buying interest, especially in the fixed income space. And that could actually cause yields in the market to trend much lower than they are trading this week. So that's majorly what we expect to happen in the market next week.